Hello, good morning, everyone, and welcome to a new episode of Chat and Chart. This is the London session open. Hope you had a great weekend. Um, Let me share my screen, and we start by going through the weekly high impact news calendar, and then we move to the charts. So let's take a look. Guys in the backstage, I'm trying to share. Can you please help? Okay. Hello. Yes, there it is. So there we have it, the weekly high impact news calendar. Um, just taking a quick look at the market. Gold is at a new all-time high. Silver is at a new all-time high. Um, yeah, the Asian session was eventful. Okay, so let's get to it. Good morning, everyone. Again. Good morning, Mesa. Good morning, Celestine. Good morning, everyone. All right, so let's get to it. We start with the high impact news calendar. We start with Monday, which is today. We have obviously the Martin Luther King today. Martin Luther King Day today, which is would cause like an early closes for the market, and like the U.S. session will be very dry of liquidity and volume because the U.S. is off. So we only have the London, Europe, and Asian session to trade today. Asian session is almost done, and now we have the European session and the London session to trade, and that's that. Now, as for China, we had the GDP coming from China for Q4. This number actually came out. Let me check how it turned out. Okay, so the GDP in China turned out to be 4.5%. Okay, so their economy is growing, and surprisingly, their economy is doing very well despite the U.S. tariffs. So maybe because they're changing their export route to other countries, to other big countries. Like they're getting the oil from Russia. They're exporting their services to the to Latin America, to other Asian countries. So their economy is actually growing despite the tariffs that Trump put on them or imposed on them as part of the let's say economic tightening. Okay, so now then we have later today we have the CPI at 2 p.m. Dubai time. We have the European CPI for the month of December. The previous was 2.1%. The forecast is 2%. So they're expecting to hit their 2% target of inflation. And I expect them to hit the 2% because last month, like we saw some signs of disinflation. Inflation is going down, and they might be hitting that 2% and then starting to cut rates to boost the economy. So far, do you have any questions, guys? Okay. Now we move to Wednesday. So Tuesday we don't have anything, so we move right to Wednesday. On Wednesday we have the CPI coming from the UK, and we have a speech for US President Trump. Now, Trump is going to talk about what's called Greenland, and he's going to try to convince the world, or maybe even bully the world into accepting his Greenland plan. He wants to buy Greenland and control Greenland because it has so much potential and so much rare earths and minerals and oil and a lot of things. So Trump understands that who controls Greenland controls the future, because it has so much like needed minerals underground that the future industries will be using, such as AI, clean energy, and so on. So, and even like traditional energy, it has oil. So Trump said if we don't take it, then Russia or China will take it. So I will never let that happen. That's why I'm taking Greenland, either like by force, or I'm just buying it. But like the people, like the representatives from the eurozone, are supporting Denmark. Now Greenland is part of Denmark, or it's under Denmark's control. So Trump wants to buy it from Denmark, and all European countries and like the NATO allies are supporting Denmark's sovereignty, and they say that this is not acceptable, and we don't accept that. So what did Trump do? Trump decided that, yeah, you know what? Everyone who does not support my Greenland plan, I'm going to impose a 10% tariff uh, effective February 1st. And if you don't change your mind, this same tariff will become 25% by June. So Trump is using his economical power and his place to actually bully other countries into doing what he wants. So let's see how that turns out. Pardon me. But for now, that's what I think this speech will be about. Now, let's go back to the CPI from Great Britain. The previous was 3.2%. Forecast is 3.3%, so an increase in inflation in the UK. This will put more pressure on the Bank of England. They will not be able to cut rates anytime soon if that happens, because it means that they need to keep rates higher for longer to fight inflation and bring inflation down to their 2% target. And they're very far off. I think they're the furthest so far from their 2% inflation target. So if that comes in higher than the forecast, or like as forecasted, this will be positive for the GBP USD, like the pair. If it comes in lower, that would be negative for the GBP, and we will see the pair going down. All right, so let me see if we have any questions. Do we have any questions? Hello, Jawad. Hello. Okay, so that's it for Wednesday. Now we move to Thursday. Thursday, we have the GDP number coming from the US. That's for Q3. So 3.8% is the previous. The forecast is 4.3%. But this is not the final number. We'll see the revised number later on, but this gives an indication. The forecast is 4.3, so a big growth in GDP in Q3. If this comes in higher, it means that the Fed has some time to keep rates higher for longer to fight inflation and bring it down to 2%, because their economy is growing. And since the jobs market is doing all right, it's not the best, but it's doing all right, then they can keep rates higher for longer, and we will most likely not see a rate cut at the end of this month. Okay, so now we move to initial jobless claims at that same day, Thursday. The previous was 198K, which was the lowest since, like, I don't know, September maybe. The forecast is like an increase in jobless claims, so more people are expected to be claiming to be jobless. So this is negative if it comes in higher. If it comes in higher, that's negative for the jobs market, and this will pressure the Fed to cut rates. Like, I want you to look at it as the following. Now, we have many data points that support the Fed in keeping rates high, and we have many data points or many factors that will be more rate cut friendly. So the first one, if it comes in, for example, lower, this will go to the side that supports the rate cut. But if it comes in higher, it will stay on the side that supports a no, like a rate no change, or like keeping rates steady. All right. Now the initial jobless claims, if it comes in like much lower, it means that the jobs market is doing well. No need to cut rates, so it will come to this side. Now, if it comes in so much higher than this, like many people are claiming to be jobless, it means that the unemployment rate will come higher in the next reading. So what they can do is cut rates. So this moves to the cut rate side. So that's how you want to look at economic data and data points. You want to see on which side are they supporting of the monetary policy. Are they supporting a rate cut or a rate hike? Okay, or a no change, for example. Okay. So then we have the core PCE index, and we have for the we have the monthly figure and the yearly figure. So the monthly is expected to have no change for the month of November. I think this is delayed because of the government shutdown, but now they're releasing it, so I don't think it will have much of an impact. And then we have the core PCE index, a yearly figure. 2.8% is the previous, and the forecast is a drop to 2.7%. And by the way, I know I mentioned this many times before, but the PCE is the Fed's favorite inflation gauge because it's more than dynamic than the CPI. Okay, so if they see that PCE is going down, it means that they can now cut rates to boost the economy further without being scared that inflation might be harmed. Okay. And we have the crude oil inventories. We still don't have a forecast number, but the last reading was a build-up, a surprise build-up in the crude oil inventories in the US. And this is without Venezuela's supply yet. Okay, so let's see how that happens. What happens then, and let's see how that turns to be. That's for Thursday. Now we move to. You are most welcome, Mr. Professor. What fundamentals should I consider for European indices, DAX, and you need to look at the euro numbers. You need to look at the European CPI, European GDP, European interest rate decisions, and so on. It's like very similar across like economy or economics as a science is like can be applied to any other economy. So it's not only about the US. So whatever we're doing for the US, you can replicate the same knowledge and science to other economies like the European economy, for example. Okay. Hello, Saif, just joined the stream and new to trading. A question, correct me if I'm wrong. You said you have only the Asia and London session to trade today. What's wrong with the NY? Nothing wrong with the NY session, but today we have the Martin Luther King Day in the US. So it's going to be like a holiday in the US, a full day. So we will not have the stock market open. We will not have and we will like have an early close on almost everything. So that's why I said no NYS, no NY session. It's not because anything is wrong. It's because it's a holiday in the US now, or today. Forex Club, hello. Hello, Suits. All right. You are most welcome. Okay, so now we move to Friday. We have the interest rate decision coming from Japan. Now, the previous reading was 0.75%, and they're expected not to change rates and keep it at 0.75%. Now, depending on who wins in the parliament, like which party wins in the parliament, they will be controlling the monetary policy. So, obviously, so far, like we're looking at like a no change and like a hawkish pause. Japan has been like on ultra loose monetary policy for decades, Very recently, they started to raise rates to actually fight, uh, or not fight actually, to like gain more attractiveness to their JPY, or the Japanese yen, because it's been used. It has been used to carry trade a lot, the JPY. So that's why they're raising rates to reduce the interest rate differential between the two, and then reduce that pressure coming from carry trades on the JPY. Okay, and then we have the S&P Global Services PMI. That's this number is for January. So the previous is 52.5. The forecast is an improvement to 52.8. So if the actual comes in higher, and anyway, if it comes in higher than 50, it's expansionary. So it's in the expansion territory. But if it comes in higher than the previous, it shows that the services sector is healthy, which is the backbone of the US economy, the services sector. It means that it's solid, it's still resilient, and it's doing well. If it comes in lower, or for example below 50, which I doubt, but if it comes in below 50, it will show that we are in the contraction territory, and the services sector is shrinking, in fact, rather than expanding. And then we have the manufacturing PMI. Manufacturing hasn't been as good as the services sector in the US. So the previous was 51.8. The forecast is an improvement to 52.1. If it comes in as expected, this would be a positive for the USD. If it comes in less, it would be negative for the USD. But overall, if we come above 50, that's still expansionary. All right. Holiday for me as well then. Yeah, you can take the day off, Suits. You are most welcome. All right, so that's it for the economic calendar. Now let's move to charts. Major Japan actually want to reduce carry trades, yes, because it's putting so much pressure on the JPY, and like to some point, having a cheap like local currency is good for people like importing from your country. Okay, so like if you import from Japan, it would be cheap to get JPY, which is good for them because their exports would go up and their GDP would go up, so their economy grows. But to some extent, after like a certain point or a certain threshold, it becomes negative for the economy. That's why they're trying to fight the carry trade or to like reduce the carry trade and the pressure it's bringing on the Japanese yen. Okay. Let me check if you have any questions before moving to the charts. Yep, all good. All right. So let me stop sharing this and we move to the charts now. Just give me a second, please, guys. All right. We go to share. There it is. Okay, so we start as always with the DXY, which is the dollar index. On the weekly, like it closed pretty bullish, closed above the bands and the like shortest two moving averages, which are the 10 and the 20 days. And now it's being faced with the 50-day moving average, somewhere around the 99.7. But we've been trending up for the past 3 weeks, as you can see on these three candles, which is a bullish sign. But I think this is because of pricing in that there will not be any rate cuts at the end of this month. I think that's probably it. That's probably the reason. Redwing, you're not late. We just finished talking about fundamentals. Now we move to technicals. So you started technicals from the very beginning. After we finish, go back to fundamentals to like have a full picture. We'll just continue to go upward as my SMA and MACD telling this. It might. Hello, Mr. Professor, and welcome from Bangladesh. Hello to everyone from Bangladesh. Let's see if it will continue going up, but it's kind of tricky now because like we have this last downtrend. If it breaks this high, yeah, we're going up. The what's it called? Downtrend would be invalidated because we will have 1, 2, 3, and then 1, 2, 3 higher highs and higher lows. So we have a confirmed trend to the upside, but so far it's not showing any like clear signs. But so far, if we want to, sorry, if we want to just like trade what we see, what I see is price is above all moving averages. It had a very bullish close on the weekly time frame, and it has nothing to stop it except for this level, which is the previous high of 100.4. If it breaks it, it has nothing to stop it all the way to 104.7. So that's what the chart is telling us. But like anything could change because Trump can like just change his mind in a second and like do something not very smart and would cause the USD to drop. Now let me take a look at this. That's a very, very clean uptrend. Higher highs, higher lows. So this week, I would be considering to be more on the bullish side when it comes to USD instead of being bearish because like it's showing like a very clean uptrend. What do you guys think? Do you agree? Yeah, and look where like it coincided with the trend line, with the 126-day moving average and the 200-day moving average. So that's like, that tells you something, yeah? Isaac, good to have you with us. You have lots of drawing on your screen. How do you understand? I don't have, I only have one indicator, which is the moving average. I just have like different periods of it. I don't have many drawings. There it is. It's just moving averages. So instead of me like drawing horizontal lines as support and resistance, this does it for me. Got me? Okay. Will you trade gold today? I might if I get a good setup, but I think like the probability of me trading today is like 20%, nothing more, because like I trade mostly the NY session. Okay, so that's it for the DXY. Now let's move to the euro, which is the exact opposite. So we should be seeing like some bearishness on the euro. Yeah, euro closed bearish last week. It closed bearish and closed below this important level of what's that? The 1.1605. It closed below, so that's somehow bearish. We need to wait and see. But so far, let's go to the daily. Yeah, the daily is still tricky though, because like if you draw a trend line here, we're still exactly at the trend line. So this makes me lose my conviction in USD going up, because if euro is going up, it means USD is going down. So like on the daily, so far it's still good. Like it didn't close even one day below the 200-day moving average, and like we can clearly see that this is a higher high, higher low, and then this could be just a correction uh, of this movement, and then we can continue going up, because we already broke Friday's high with this candle, which hasn't been open for too long. We go to the 4 hours. Yeah, this could be an engulfing candle, a reversal candle to the upside. Let me check if we have, yeah, and we do have a divergence on the 4 hours. So we have like lower lows here. Okay, go to the MACD, you'll see higher lows, which means that it's losing momentum, and it's becoming, that's a positive divergence. So here it's making higher lows, and here it's making lower lows. So it means that it's losing steam to continue going down, and it might be starting to go up very soon. So this changes my mind about what I saw on the XY. Let me confirm with the GBP USD, because the market is connected and it has to be connected. So if you're not sure about one uh, instrument or one asset, you can get what's it called? You can get the confirmation, or the you can like make sure that you're on the right track by connecting it with other instruments and pairs. Okay, so yeah, on the weekly, it didn't close, like it closed bearish, but it's still within the range. It didn't close below. So far it's still somehow like corrective. It's not impulsive to the downside. It could be just corrective. What's happening here? Yeah, we're almost at the 50-day moving average. This is done. We don't need it anymore, this channel. Let me see if we have like a clearer view of this. Yeah, so we can be going all the way toward the 132. Let me check. Yeah, so we also have a divergence here. So lower lows, but here it's making higher lows. Um, I think. Yeah, we need to clear this area, which is the 135, before, like 100 pips from here, before deciding if it's going up or down. But we do have a divergence. If you ask me what I'm going to do in terms of euro, GBP, USD, the whole thing, I would wait. I would wait at least till today closes, because it would tell me a lot about the rest of the week. Okay, because like we're at a very tricky point. It either continues going up from here, or it continues to go down from here. Like that's a very critical point. Okay. um and by the way, technically this is how pivot points are created. When you're at a critical point, and from that exact point you either go up or down, that's where you get a pivot point, because indecisiveness will keep the market swinging around this area for a while, and then whoever wins, bulls or bears, then it becomes the pivot point that makes the market go, or it makes the market respect those levels, and price respect those levels, like we use them as structure in the future. Any advice? You were trading Bitcoin last year. You can be trading Bitcoin this year as well. Bitcoin is doing not bad. I started studying fundamentals to support my technical analysis, because it was written in the first chapter of technical analysis of financial market. I want to develop my own strategies from now on. Yeah, that's how you should be doing it. You should be developing your own strategies, but fundamentals are more of a practice thing than like something you read or learn. So you need to like watch the news much more. You need to be watching my streams a lot because I explain how the economy works, and of course I have some surprises for you guys in the future in terms of economics and in terms of um, like fundamental analysis. Not only fundamental, but like I'm going to hook you up, guys. Don't worry. Um, Let me check if we have any more questions. Trump tariff decision about Europe, how much affected to the euro? It would affect the euro, but it's not instant. This would mean that the supply chain will be disrupted. That's how you need to look at it, more than like the direct impacts on euro or USD. So it will take time to affect, and the effect will be like let me put it this way. So the tariffs will impact the economy. The economy will have we have like regular readings of the economy, like the GDP, the CPI, and the whole thing, right? So when this happens, the actual effect will happen after we see inflation going up in Europe. We will see growth going down in Europe, and prices going up in the US and Europe. So that's when the real effect will happen. So it will take some time, but it's negative for both economies, of course. Uh-huh. Let me see. Gold is painful to me. It blew my account in just one trade because you didn't manage risk. I don't consider gold as a beginner. Yeah, let's move to gold now because everyone is asking for gold. Um, Gold is making a new all-time high. This was a deep fake out, but you could have missed it just by doing this. Look how easy. That's just a trend line, 200-day moving average on the hourly time frame. That's how you should be buying. But anyway, like even if you bought here, your stop loss is a bit like bit too far, like almost $80. So like in such conditions, I prefer to scalp gold instead of swing, because like look, it doesn't look so good. So even if you bought somewhere around here, okay, which would be a great trade, by the way, to get to the all-time high, that's a one-to-one. I don't like this kind of trades, to be honest. I like crazy risk-reward ratios. That's how, like, that's when I think, yeah, this trade is worth it. Okay. Okay. You are welcome, Mr. Professor. Okay, so we're still on an uptrend, obviously. Let me start with the weekly. So the week closed, last week closed pretty strong. And we started the week like opening on a gap, which makes sense because you saw how Trump is acting. We have possibility of intervention in Iran, and we have the Greenland story, and we still have Russia and Ukraine, and we still have the Middle East and Israel and Gaza, and we have a lot of things. So it only makes sense to see gold opening on such gap. Okay. And by the way, speaking of gaps, people have this thing for gaps, like gaps have to be filled. Spoiler alert, it does not have to be filled. Like I know gaps that have been or that haven't been closed since 1970s maybe. So what do? We keep selling until that gap is closed. So that's a common mistake. That's a retail myth. It does not exist. Um, like this one will probably get filled, or like it will fill this gap, not because of anything, because it's very close to the trend line. But sometimes when you have this explosive gap, like for example when October 7th happened in 2023, and we saw gold opening like on a 50 or 30, 40 dollar gap, it never closed it, and we're still going up with gold. So this one wasn't so massive, so it's just like a $30 gap that is very close to the trend line. So we might be seeing a correction toward here, so we can close this gap. But will this correction happen because gold has to close the gap? The answer is no, it does not. Sort of rejection to fill the gap. Yeah, you know what? I didn't read your question. I just answered your question without reading it because I started talking about gaps. But filling the gap is not something I'm a big fan of. Angola says the real reason behind new all-time high. Yes, that is correct, Mesa. So move us, sir. Also using my favorite oscillator, stochastic RSI. All right, so we still have plenty of room to go up. It's still bullish. Nothing changed here. I wouldn't be trading gold probably today, but on lower time frames, that's a very clear bullish pennant. We might be seeing the 4,700 today easily. We'll have to wait and see. But for now, like if I have to, like if you like hold a gun to my head and say you have to trade gold today, I would buy. I would not sell. Okay. What do you think? As I'm waiting for USD to show some clear direction on 4 hours, because usually my shift after today's market open, it just exploded today. Yeah, that's what I said when I was looking at euro. There's a big possibility that euro might reverse from here and continue going up. But that's just theory. We need to wait and see how today closes. If today closes strong, then yeah, the case of euro being bullish becomes stronger. Yeah. So that's it for gold. Let's take a look at Nasdaq and then call it a session. Yeah. So we do have some kind of a so the safety net is here. It shouldn't break below 25,000 if it's like if it's going to continue going up. But which is this? We shouldn't be breaking 25,000. But overall, I said it many times. I am bullish on the U.S. stock market. Let's wait and see. But even today, what's moving on the screen is just the CFDs. The stock indices are not, like the actual stock indices are not moving today. It's just the CFDs. Yeah, I'm still bullish, but this could be, I don't know. I'm also going to wait and see because, like, the days where the New York session is absent, I'm not very sure of how the market would react. Like, it's harder to forecast the market. So I'm going to wait. Today is there's no trading for me. I'm going to trade starting tomorrow, but I will keep an eye today to see how each instrument closes, because that will show me how the overall direction would be for the week. Um, just guessing, gold will continue to go up. I think euro will continue to go up, and the U.S. stocks, or like stock indices, like the Nasdaq 100, the S&P 500, will also continue going up. Uh, I think the DXY will start like getting some weakness this week, but that's just theory. I'm not sure of anything. I need, like, the closer I am to like the close of today, the more accurate my forecast would be, and the more confident I would be in my analysis. But so far, it's still like we opened almost on gaps on everything um, in terms of risk premium. So safe havens opened a gap up, and the risky assets, which are the stocks, opened on a gap down. So that's it. I use 15 minutes. What do you think? As I'm waiting for your resolutions. Yeah, I just answered that. Yeah, so that's it for today, guys. I hope it was helpful. I hope you learned something new. If you have any questions, you know where to find me. What's all right? Today, gold is going to boom. Okay, yeah, I think so too. So back to the outro. So guys, I hope this was helpful. I hope you learned something new. And if you need anything, you know where to find me. Have a great trading week, and take care of yourselves. Trade responsibly and always trade in. Bye bye.